Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Trivesh K., Nick W., Jackie A., and Ryan S. Julian Tapp has joined us on the show today. Julian is Chief Nuclear Officer at Vimy Resources, a Australian-focused uranium project developer advancing the Mulga Rock project in Western Australia. The company is listed on the Australian Securities Exchange under the symbol VMY and also on the US OTC markets under the symbol VMRSF. Mr. Tapp, welcome to the show, and how are you, sir?
Thank you. I'm very well indeed, and very pleased to be on your show.
Just for the audience, Julie and I had met back in June 2019 at the AUSIM 2019 Uranium Conference, so it's good to have him on and to finally chat. But Julian, let's kick it off here. Maybe just start out with giving your thoughts on the broad uranium market at this stage, what we've seen over the last few months with COVID, and what do you see coming up next for the sector?
Well, look, I think for the uranium market overall, we all accept it's been in the doldrums for quite a while. I actually think it kind of reached a bottom around the end of 2016, and it has actually been slowly creeping up since then, but with pretty large gyrations. Seems to be a piece of news comes out, it goes up, it loses momentum, and then it stalls and goes back down again. But each time it's gone down, it's gone up a bit. So we had an increase earlier this year, got up near 35, it's got back down, it's stabilized at just under $30 a pound. And now we're in that sort of, and this obviously is just the spot market. We're in that strange situation where, I guess it's just waiting for some more news to drive it around. But at the same time, and probably separately to that, there seems to have been, at least very recently, quite a lot of interest in uranium equities as opposed to the uranium price. And that looks a little bit divorced from the uranium market, at least as far as the spot market is going. And let's be clear, the contract market is feeding very little information whatsoever at the moment. And that interest in uranium equities appears to be coming from a change in view about uranium equities. They've been considered poor stock for some time, but now there seems to be some money flowing into it, whether it's the Democrats looking more favorably on nuclear power, whether it's the uranium strategic reserve, whether it's ESG money flowing into uranium. There's a whole host of factors that are put up for why it's gone up, but we have had a good burst recently, and that seems to be different from what's driving the uranium spot price. So it's an interesting time, and I'm looking forward to seeing how it develops. So we've had a series of recently COVID-related issues, the shutdown of the mines, the stopping of production, the development of well fields for Kazatomprom, and we've had Cigar Lake come back on and now go off again. And it'd be interesting to see what the spot market does in response to this most recent announcement of the closure of Cigar Lake again for an undetermined period of time. But I'm assuming it's going to be a couple of months.
Good points and a lot of things there, but I'd like to see, first, let's see if we can break prior highs. I want to say 2016, we saw a number of equities reach some highs, and we haven't quite broken out from that high level, looking back here over this whole trend in the market. So that'll be a key thing to watch as far as seeing the equities rise to all-time highs since 2016. Some have, many haven't. And the cigar debacle had a restart that was attempted, and it was in ramp-up stages, and then all of a sudden this recent news events happen. And so I think there is a motivation by Cameco to keep Cigar going. It makes a lot of sense for them economically, but we've seen them try to get it going again quite rapidly, as we saw earlier this year. So I think that's an important piece of the puzzle for them to piece together. And then, the last thing too with CSR, now ESG, I'd like to modify ESG and add an E in front and call it EESG for economic, environmental, social governance. I think the economic portion of it is not thought about. Anyway, so it's an interesting set of circumstances and how this is coming about in the market. Well, Julian, let's talk your time and experience in the natural resource sector. You definitely have some background there, and then also in uranium. But go ahead and give us your background and experience in this sector and also just the broad natural resource sector.
So I'm not originally from the mining sector. I'm an economist by training. And after kind of working in universities for a while, I worked in industry. So I was actually the chief economist for Ford's operation in Europe. And then I worked in the oil industry. I was an economist for BP. And then I worked in the aerospace sector, and I was an economist for British Aerospace. My wife is from Perth, and I ended up moving to Perth in 2003 and looked for work, and really in Perth, mining's the sector to be in. And I found a job in the iron ore industry with what was then a startup company called Fortescue Metals Group. So I joined them in 2004, and I worked for them till 2012 and did a whole load of things for them, approvals, legal stuff, basically whatever they wanted me to do. And then I left them in 2012 and joined Vimy in 2013. I joined Vimy partly because Mike Young was also looking at Vimy. He was interested in me joining him. We kind of looked at the uranium prospect and said, well, Mulga Rock looked like a very good project. But we all know that uranium projects kind of have a bit of a handicap, which is they have to get through their approvals, and that can be quite difficult. I have some expertise in doing approvals, so I joined Mike and we got the approvals. So we got the primary approvals for all the environments signed off by the minister in December 2016, and since then I've just been going through the secondary approvals and helping Mike with kind of marketing and the general selling the story. I mean, and look, so my background also is I'm not only an economist, but I am actually a firm believer in nuclear power for lots of reasons, and I've done the work on this, that the carbon emissions associated with nuclear power on a full life cycle basis are much lower than anybody gives credit for. So the IPCC in their last report, I think they penciled in 12 grams per kilowatt hour for nuclear on a life cycle basis, and they had wind at 11, which put nuclear right down next to wind. I looked at their calculations and read all the papers that supported that, and they've massively overestimated the carbon emissions associated with nuclear. And the reasons are, they penciled in too many emissions for uranium mining because they looked at conventional mining and didn't even consider in situ leach mining. They looked at the upgrade, the enrichment process, and had it driven by the wrong technology, out-of-date technology. So basically the answer is that for nuclear it's less than 6 grams. So nuclear is about half of wind and a lot lower than solar PV. So in a world where, whether you like it or not, we're moving towards net zero by 2050 in lots of countries. But against that sort of political impetus, nuclear is going to have I hate to use the word renaissance because it was used before and it never happened, but nuclear just has to be part of the mix if you want to control carbon emissions and you want to do it cheaply and you want to have reliable power. And, all the information that those who are against nuclear power feed out there, all that information is kind of based on cherry picking the data and presenting the wrong picture of it. I'll give you another example. It's when you look at the length of time it takes to construct a nuclear power plant, they throw into their average calculations nuclear plants that were started in the 80s and then stopped for 20 years and then restarted again. They say the average length of time to build a nuclear reactor is like 9 years or something like that. Well, it is if you take an average. But if you actually look at countries like Japan and China and Korea that have had a successful record in building nuclear reactors, the length of time it takes them to build a nuclear reactor is about 5 years, and it was when they started doing them in the 70s, and it's still about 5 years when they try and build one now. And one of the reasons why people think nuclear's uneconomic is the notion that you can't build them on time and on schedule, and the capital costs will blow out and you'll lose money, so nobody's going to build one. And that's just a misrepresentation of what's likely to happen. And that's partly why there's a lot of enthusiasm around now for small modular nuclear reactors, because they should put an end to the risk that is associated with very large nuclear reactors. And I'm not denying there isn't a risk. I mean, the French nuclear program, the EPR that they're building in Finland and France and in the UK, I mean, all of them are in same technology. They're all in trouble because they're going to take a really long time to build. I genuinely think when you get small modular reactors constructed in a factory, transported to site, and then assembled there with all the back end and everything, it's not quite as modular as people think it might be, but the construction risk and the cost risk is going to be massively controlled by that type of approach to building nuclear reactors. So for lots of reasons, I'm really enthusiastic about nuclear. I just think it's the way to go.
Yeah, we've done a lot of work on it as well, and I fully agree with your points. As long as stupidity and idiot politics don't get in the way of it, I do believe that it'll work extremely well as SMRs roll out. Now, if bureaucracy and red tape get involved, we know that can stymie such advancements like SMRs, which make a lot of sense. And, we'll see how that goes as companies like NuScale in the U.S. and Rolls-Royce and so forth get going on their different models. And you're absolutely right. Wind and solar is silly. It's really silly. And I'm glad you used full life cycle basis, because that's the only thing that matters. When you add that in and you talk about the benefits and drawbacks of uranium mining, obviously upstream, and then all the way down to waste disposal on the downstream end. You have to look at all of those costs. You have to also look at the benefits. Mining brings a lot of economic benefits, more so than environmental impacts, much more. Of course, somewhere between there, you need responsible and proper, prudent mining means and methods. Well, Julian, let's move on. Let's get into Vimy here. Give us just a quick 1-minute overview of the company for the audience.
Okay, so Vimy, we've got two projects. One is Mulga Rock. It's about 90 million pounds in the ground in a very arid region in Western Australia in the middle of nowhere. It was originally found by Japanese, and we acquired it. Or the entity that was predated us acquired it a long time ago. We've developed it up to a project that's ready to go. It's capable of producing about £3.5 million a year for at least 15 years. And look, we've done a DFS and we've done a DFS refresh. We're very confident in the numbers around the cost of production. The cash cost of production, about $26 a pound. That's cash costs. There's a bit of sustaining capital, takes it up over 30. And that's for the life of the project. We have another project, which is in the Northern Territory. It has a small resource. Angularly is about 26 million pounds of uranium in the ground, but that's a tier one asset. And by that, I mean, this is an asset that if it's brought into production would make money even in the worst downturn of the market. That's what I mean by a tier one asset. So it's not huge, but the cost of production, the capital cost up front and everything are a first quartile type mine. So those are our two projects. And look, to be honest, and I guess it's an important point, it distinguishes us from some others. We are genuinely a uranium company. We're not kind of like trying to get rare earths or anything else, to get people interested in the company. At the same time, we actually have got base metals at Mulga Rock, and look, if the base metals make sense, we will develop them and include them in the production. But we've never been chasing anything other than uranium. We are an ultimate uranium company, but won't overlook byproduct credits if they're available.
Yeah, I think that makes sense, Julian. And I think also that, look, if I want copper exposure, I want gold exposure. There's plenty of other fine companies out there that are focused on that. If I want uranium exposure, we're here for uranium. Quite frankly, we don't give a damn about the other materials because we know we can go focus on companies who are doing that type of work. And there's plenty of them out there, of course, which we cover other sectors here as well, not just uranium. But let's talk a little bit more about the projects in a moment, Julian. But let's start out getting into the capital structure here.
Yeah, sure. So look, no debt, 778 million shares on issue. The price was about 5.5 cents earlier today. I don't know where it closed. That values the company at about 43 million. Um, and in terms of who owns the company, it's about half retail investors. We've got a couple of big shareholders, which is Paradise Investments and Forest Family Investments. Both hold just under 10%. And then we've got a variety of institutional investors and high net worths that hold most of the rest of the stock. But as I said, so cash on hand at the 30th of September, we had about 5.5 million. And as I said, no debt. And look, if I keep saying it, it's because when I first joined Vimy, I had a heap of debt, had a whole load of convertible notes, had a terrible share structure with most of the equity owned by one or two large players. And it was just really difficult to convince anybody to invest money. And all of that's turned around. We have a well-balanced holding. We don't have any debt. I mean, when I first joined the company and Mike and I had to raise some money, nobody wanted to put it in because they were worried that it would just go to the debt holders and they'd lose their money. So, nice, well-balanced portfolio. And I might say a reasonable amount of volume now. I mean, that's the other thing. Lots of investors looked at Vimy and it's like, oh, well, we kind of like it, but, if we buy a chunk, we could never get out again because there's no volume. Now we've got the volume as well. So in terms of the kind of capital structure, it might not be perfect, but it's a hell of a lot better than it used to be. And we're still working now on improving it.
And Julian, talk about maybe some of the institutionals there. Has there been any interest, and maybe they're already shareholders? I'm not familiar with it, but is there any interest, or maybe do you guys have interest in bringing in some of these other specialty uranium funds like Tribeca, like Sachem Cove, Segra into the share roster, or maybe they're already there?
Yeah, look, there has been some interest. And some of them have come in and left again. I think a lot of them are interested in kind of like, playing the sudden ramp up. I think the big investors we've got in at the moment are in it for the long haul. They kind of understand that, I mean, I think, look, I think it's one of the things that annoys me. I mean, Vimy seems to me incredibly undervalued on the fundamentals. We have a great project, look, and I'm not in the business of knocking anybody else's project. I just think that one of the things that distinguishes us from others and that makes long-term investors interested in us is that we all know that when the price goes up, there are a lot of uranium entities out there that will just rise with the tide, and but they're unlikely to ever get their projects into production. I mean, they're a good play for somebody who wants to invest in a uranium stock, see it rise when the prices rise, and then get out again. But we fundamentally believe that our project is good enough so that when the tide rises, this is a boat that'll sail. We're going to leave the harbour because when we get the right price, we're all ready to go. And again, it's really important to understand this from our perspective. It's like, we considered, should Vimy stick the project in the freezer and just wait for the price to recover? Yeah, that's a strategy, but my view is if you stick your project in the freezer and wait for the prices to recover, when they do recover, it's going to take you longer to get out of the freezer than is necessary to meet the contracts when the price is up. Once you're in there, once you've put everything on ice, when the price spikes, utilities aren't going to write contracts with an entity that's been in the freezer for the last 2 years and says, well, give me a contract and I'll get out and get into production in 3, maybe 4 years. It just doesn't work that way. You kind of have to be ready to go when the price comes. And that's been our strategy. So we're continuing to get everything ready. We're continuing to talk to utilities. The price isn't there right now, but gee, we can smell it. It's going to come, and we'll be ready to go. And that to me, that's a major distinguishing feature for Vimy, that we will be ready to go.
And on the cash front, how far do you see the current cash carrying the company forward at this stage? And do you guys expect to raise capital in 2021?
Yes, we would have to. So, people may look at us and go, well, gee, as you say, well, why didn't you just put it in the freezer? But one of the things that we've done is, and we had to do, was We had to get all the approvals for our project. We had to get the mining leases granted. We had to get everything done to make sure that we could keep the right to the tenure and keep the approvals in place. And we actually have quite high holding costs that we pay to the government in terms of rents and rates and, just for holding the land that we've got. And look, if you're not in the freezer, and you've got a good workforce and a good team and you want to keep them doing stuff. So we've done a DFS refresh. We've sent a team up to the Northern Territory, only very small, to do cheap kind of geophysics and termitaria sampling and everything else. We want to keep progress going, manage the cash as best we can. We have to spend some of that money on it. We have an installment to Cameco that paid for the Northern Territory land coming up. Yeah, look, the cash will last until the middle of next year. We might be able to eke it out a bit further, but let's put it like this. We couldn't, with our current burn, get to the end of next year without raising more money. Having said that, it all depends. It's no secret. We've got the feelers out to look for partners that might want to invest in both the Mulga Rock project and the Alligator River project. The idea is to get partners in who'll fund some of the work, particularly the Alligator River. We'd like to keep developing that, and if somebody wants to farm into it, we've got KPMG running a process for us. They're having a look at both operations and seeing what interest there is in partnering up with us. Maybe that's one way we can fund operations without further diluting the shareholders.
Yeah, that sounds good. And as you know, the share price has come down over the years, and the most recent capital raises, if I have my info correct, when I reviewed here when preparing, was about 5 cents. You guys did a capital raise in October 2019, and then about 3.5 cents in June 2020. Going forward here, Julian, if the incentive price to bring the financing to the table and to get this project underway, if that incentive price doesn't happen in 2021, will you guys look to reduce costs to keep things tight while you guys wait for the correct market conditions to finance the project and transition into potential cash flows?
Yes, at the end of the day, we'll do everything we can. I mean, look, we've done quite a lot to cut costs, but as I explained to you, there's some of the holding costs, like the rents and dividends we pay. It's like $800,000 a year to keep a tenement in good standing, and you just can't avoid that. I'm currently on 2 days a week for Vimy. Quite a lot of our people are on, reduced hours to try and eke the money out further, and we're always looking at ways that we can reduce cost and do things differently to make the money go further.
Let's talk about the key people, obviously, beside yourself. Talk about the Vimy management team and the board. And then, how do you believe that this management team and board stacks up against some of your peer management teams and boards?
Well, look, let's start at the top. Mike Young, managing director. Look, I've known him for a really long time. He was what got me into Vimy. And I think that if I had to pick a defining feature, other than he's a really great guy, it's that he's actually taken a concept mine, a piece of moose pasture in the middle of nowhere out in the Pilbara, and a hope, and converted that into a $800 million company that was paying dividends and exporting iron ore. And it's that sort of greenfield experience that I just don't think any of our peers have come close to. So, and it's a mindset. Right? You're not about pumping this thing up to make it look attractive. We're about making sure we get it ready to go into production. Now, whether you get taken over or you do it yourself, it's the same thing that you need to do. You need to push it in. I mean, that's one of the first things that Mike and I had a conversation when I first joined with him. It was like, look, whatever happens, whether we get this into production or get taken over by somebody, the best strategy is to get this project into production. It's, stop drilling, stop looking for a bigger resource, because, the reason why when we joined Vimy, it was so undervalued was because it just looked so far away from production. It was viewed as risky. The way you increase the value is getting it close to production, not getting the tons and pounds in the ground bigger, but the getting it to the point where people can say, oh, yeah, that could go into production. So Mike was the right guy for that. Now I have to mention Scott Hyman, who's based in the US, knows the market better than most, and from both sides, sell side and buy side. And I don't think, and lots of people don't understand this, that the US market might be almost 30% of global demand for uranium for nuclear power plants, but it's considerably more than 50% of the market, the accessible market for a company that's looking to finance its project by writing long-term offtake contracts. When I say accessible markets, we're never going to get a contract with Russian utilities for supply of uranium. They've got enough of their own. We're not going to get contracts with Chinese off-takers that are contractually financeable. So there's quite a lot of the market that you can't access if you want to write contracts and then have a bank say, yeah, I'll lend you the money for your project because I can see that the offtake party's got a good balance sheet and a good reputation and will stand by their contracts. So having Scott in the US able to go around, visit utilities on a regular basis, understand them. I mean, we're at the point where we talk to the utilities, and Scott does talks to them. We respond to their requests for prices and quotes. We understand what they want. We work with them. We're not quite there because the price they want to buy at and are able to buy it at the moment is below what we can sell it at. But we can see that that gap can be closed quite rapidly when the market turns. So Scott's absolutely essential. And then look, I got to give a cheer for some of the rest of the team that don't get mentioned much. We have a manager of geology, Xavier. He's just so knowledgeable. I couldn't have got the approvals as quickly as I have without being able to access his knowledge and understanding, not only of uranium mining and the uranium market, but also just all the environment that goes around it, his understanding of the conditions. And then, we've got a great team. Tony Chamberlain did our DFS for us, still with us as a director, understands, the kind of the processing side of it incredibly well. And, Marcel Hilmer, our CFO, has got a lot of experience. I've also got to mention just our overall team. We're a small group. We get things done efficiently and fast. We keep our eye on new technology. We're looking at ore sorting, for example, radioactive ore sorting to reduce the cost at the Alligator, because to reduce the mining cost. Where, our team off their own bat took the cameras up to the Northern Territory to do some environmental surveys while they're up there doing exploration work to try and compress the approvals time. So we have a lot of people, not a lot of people, the people that work for us have a lot of experience, and they're empowered, and we allow them to put in place measures that will make us do things more efficiently and faster and better. And if I had to stress anything, that's it. It's the team that's kind of, we're all people who know what we're doing. We know uranium. We know how to get mines into production. We just need the price.
Let's move into Mulga Rock. You've done a revised definitive feasibility study, and you guys have a schedule presently showing production in early 2024, Julian. Just talk about the current status, your guys' plan to move forward here on the timing, the remaining permitting that you need to get. Talk about the time frame, and obviously with this schedule right now, you guys will have to do the construction financing package. I want to talk about that specifically in a moment, but just talk about the plan from here on timing and remaining permitting and so forth to get you to that schedule, early 2024 production.
Yeah, it's real easy. We need the price to get to a level where we can write the long-term contracts that we need from the utilities to be able to finance this. So let us assume that happens early next year. We can write contracts. And let me wind back. So one of my jobs is doing the approvals and getting all the permitting. One of the problems I face is the government just doesn't see a need to do them in a hurry when they can see that we don't have contracts in place to push the button. It's like, why are you hurrying us up? You're not ready. So we've done the permitting to get the primary approvals. We've done a lot of the permitting to get the secondary approvals. and it's my job to get them and get them quickly, but I don't have any leverage without a contract to be able to say to the government, you do realize that, there are these jobs and there are these potential exports and these royalties, but probably more important than anything else, it's these jobs they would like to see get into production and so that create that employment and generate incomes for families. And they don't see that on the horizon. So, and look, lots of people talk ambiguously about permitting. I just kind of like want to explain exactly what we've got. So to get a mine like this into production, you have to get the minister to agree that the environmental impact is acceptable. We did that, and we got the ministerial sign-off in December 2016, at least at the state level, and the federal government followed a month or two later. But that's, and if you like, the overarching approval that says, I've looked at all the things you're going to do, and I've considered their impacts on the environment, and yeah, it's acceptable, subject to certain conditions. You have to do it in the way that I've described, and you're limited it. So let's say we have to dewater the mine. So our ore sits just below the water table. So when we want to mine it, we strip off the overburden, and then you send dedicated equipment in to mine the uranium ore, but it's below the water table at the moment. So before you get down to that level, you've dewatered the mine, sunk the water table below so that it's dried out a bit, and you can get the equipment in there and mine the uranium ore. Now, when we got that overall environmental approval, it was, hey, yes, I understand you're going to do some mine dewatering. I've had a look at the impact of that. I agree that you can do that mine dewatering if you do it subject to the following conditions. We can't exceed 2.5 gigalitres per year. What we do with the water's control, we have to monitor its quality. We have to put it back where we say and put it back. So all of that, and all of that's been approved. But now, under our regulations, if you want to construct dewatering equipment, the facilities, the pipelines and everything else, that's a different approval. And what you have to do is you have to get works approval for it, and then you have to get a license to operate it. And the way it operates is you tell them what you're going to do, and then they go away and they check against what the minister approved and what the conditions attached were, and say, oh yes, what you're now specifically saying you're going to do meets with what the minister said you can do and the conditions applied to it. And that isn't done by political people, that's done by bureaucrats. So when we talk about primary and secondary approvals, the primary approvals were like the political ones, and the secondary approvals are the bureaucrats to check against the primary approval, and they tick a box and say, yes, 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 okay, it's yours. Now, you wouldn't believe how many secondary approvals they are, but there's something often that you need to get through the entire life of the mine. So when people say, have you got all the approvals necessary to start? It's like, yes, but have you got all the approvals necessary to complete the life of the project? No, because I'm going to be getting them for the rest of the project life. So going back to the example I gave you of dewatering, I dewater the area where I'm mining, and then when I finished, I move to another deposit. Oh, I've got to get new works approval and new license for that new area. And I'll keep doing that for the entire 15 years that the mine life is operating, all the time doing it under the umbrella of the overall ministerial approval and the conditions that came with it. So yes, we've got the permits we need, and so we've done the ministerial conditions. We've submitted our mine plan and our mine closure plan, and they're currently under review. And we've got a works approval that's just about to go in, and after that, we'll have to do the licenses. But I'm not worried. We're past the ones where, a politician can say, actually, I don't like uranium mining, so I've decided not to approve that. That's gone. We're past that.
Understood, Julian. And the community work, how is the community? Obviously, there's probably not much community directly at the project, but how is the community work, and do you guys have local support as well?
So yes, you're right. There isn't much of a local community. So we're on the edge of a desert. The only reason there's a road to where we are is because there's another mine a bit further out than us, the Tropicana joint venture gold deposit. We drive up there. To give you some idea, you go to Kalgoorlie, which is like 800 miles inland from Perth, and then you drive. It's another 240 kilometers, just heading out beyond where anybody lives. we're in a part of the country that's never had farming. There's not enough water, and Aboriginal people have never actually lived on that particular bit of land because it's just sand dunes with no water. There's just and people don't get it. It's like when we're trying to get the approvals in Australia, you want to build anything, you have to get a beds and banks permit, which is like anywhere where water flows, it might have made a dent in the ground. You have to get a permit to disturb that. We don't have to do any. There's no surface water flow where we are. It's just sand dunes. So when it rains, the water goes into the sand. It collects in clay areas where very large puddles effectively develop, but they only last for a few days and then they disappear. So there's no real Aboriginal people from the area where our mine is, but we know the Aboriginal people from the areas further away where there is water and that people do live and travel and have done in the past. And we have a great relationship with them. Look, and it was like one of the first things I did when I joined Vimy was, okay, let's talk to the local Aboriginal people. You know, they were in line with us, which is basically, we're going to develop this project, and when we do, there's going to be jobs for your people, and that's exactly what they wanted. And you know, I even said to them, look, we don't need to sign an agreement about me giving you jobs. I want your people working on our project, and you want your relatives, sons, everybody you know, to have the opportunity of an employment. You know, it's a win-win here. And look, so we've always had a good relationship with the Aboriginal people that have a claim to that area. So there's no, you know, you stick a pin in our mine and look for any resident. No residents within 100 kilometres.
Talk about the financing part of things. You mentioned, you know, the contract, the need of a contract, some type of offtake to be able to get the rest of the financing. Can you talk about what you guys need for an initial price and the type of contract you're looking for to get with the financing package? And then also, what percentage or what would you guys like to see in terms of size to get the financing package going? And then also, can you just talk about, you know, the debt and the equity side of that financing package, assuming you guys have a contract of some type in hand?
Yeah, look, I don't think there's a definitive answer to that. What we know is to get the Mulga Rock project going, we need, at the moment, the capital investment is about 250 million US dollars. Look, once you work out what our cash operating cost is, our all-in sustaining capital cost, then you add on top of that that financing that 250 million. Some of it's going to be debt, some of it's going to have to be there's going to be an equity injection or a strategic partner coming in. Somebody's going to have to put a bit of, unless the share price, look, the share price recovers and, you know, our market cap goes to 100 million, which is possible, but you know, we're not waiting for that to happen. We might be able to raise just on debt with our own equity. I think, you know, I think we probably accept that at the moment, without a significant appreciation, we need a strategic partner, or we'll need to get more equity in order to finance the project. We're going to have to write contracts. It's not going to be one or two contracts. We're going to have to enter into enough contracts for a bank to be able to say, hey, we'll lend you the rest on the strength of those contracts. Now, the amount they'll lend to us, the debt equity ratio, that depends on the price we write and the credence that a bank gives to that offtake contract with a nuclear utility. And that's one of the reasons why we're so heavily centered on US utilities, because they have the balance sheet and the reputation of complying with the law. That means that banks will give them a very high rating. So I can't tell you how much will be necessary. Obviously, what we don't want to do is write everything into long-term contract at prices that just enough to get us into production and then leave no upside. But it'll all depend on the price we're able to secure, the attitude of the bank to the leverage, and the volume we're able to secure. So, I mean, in the dream world, we write, I don't know, £2 million a year of contracts at 55, and the banks finance us on that, and we have the rest available to give us some upside when the price goes even higher. But who knows? I mean, at the end of the day, our job is to secure the contracts and then enough to be able to go away and with the equity providers and the debt providers negotiate something that gives everybody a win. And I don't think I can be any more specific than that for you.
As far as the pricing goes, I mean, you guys basically are definitely wanting 50 plus. And then I suspect the type of contract would be floor with some kind of escalation as well, or initially for the financing, just a base floor contract. And then are you guys looking at other options as far as royalty streaming type transactions as part of a debt financing, equity financing? What options are on the table on that side? If you guys can be 50% anticipated nameplate, that's probably a pretty good place to start and leave some optionality on the upside in the price.
Yeah, let me just wind back and disaggregate that a bit. The price. We did a DFS. The DFS refresh, we used at $55 a pound, and that gave us an NPV of sort of, 400 million US dollars thereabouts. In the current market, we know we can't bid $55. It's just out of the money. So yeah, around 50. In the current environment, utilities are very keen on fixed prices, maybe with an escalator. They're not keen on the upside that could leave them exposed if the price goes up a lot. So we work with them and say, well, okay, we also understand that for some of them, they're looking at the forward curve and they're looking at us going, well, you want, let's say, 50, but we can't justify 50 for 2024, but we can for 2026, 2027. And so we try and work out something that at the end of the day gives us something that's bankable at a price that means that there's something in it for our shareholders. So, I can't give you a single price or a single structure because we work with the US utilities and we try and find out what fits them best and fits us best. Yeah, look, we're looking at the high 40s, the low 50s. It's not there yet because they're getting offers lower than that at the moment. So we're going to have to wait until the price that people are bidding into long-term contracts has gone up a bit from where it is. But again, let me just give you some perspective as the way I see it. And I said I come at this as an economist. Look, when the spot price is at 30, it's difficult to get the utilities to want to pay more than 40 for long-term contracts. The spot price is a strange beast, but at the end of the day, most of the utilities want long-term contracts and most mining companies want to sell under long-term contract because they've got to finance their projects. When you look at Cameco's approach to when they're going to switch back on McArthur River, it's like, well, they haven't been definitive about the price, but they have been definitive about the fact that they're not going to be guided by the spot price. They're guided by the long-term contract price. They want long-term contract prices at a level that justifies switching them back on MacArthur. And I understand that's somewhere between $40 and $50, but I don't think they've ever been specific about where it is in that range. Now, when we did our original DFS, I looked at what I thought would be the long-term price for contract pricing over the life of the project. And my background, as I said, as an economist, I work for industry. When you work for the aerospace industry or the oil industry, they're often interested in 20-year forecasts. So I tried to come at it from that perspective as like, never mind what the price is now, where do you think the contract price will settle over the long term? And I arrived at the conclusion that when you look at the structure of the market, you've got Kazatomprom and Cameco that control a significant amount of production. And if you throw in Orano as well, not ownership, but actually controlling the operations, you're getting up to sort of 75, 80% of global production. Those companies would rationally want, when the price goes up, to not switch on their production. They'd rather have the increase in price flow through to their bottom line. But what they don't want to do is for the price to go up so much that big competitors are encouraged into production. And so when I did the DFS, we set that level at about $65. So that was the original DFS. I think we've come to the conclusion that it's likely to be a bit lower than that now. But But certainly we think there's a ceiling price. So the price will go to a certain level, and then the Camecos and the Kazatomproms and the Iranos of this world will turn up the production as much as they can from their existing assets and from their development projects, and not want to see the price go above a certain level, let's say 60. I can't tell you what that level is for them. It's just my assessment as an economist is okay. You want to see the price go up. So when prices start going up, they won't turn up production. They'll have the benefit to their bottom line, but at some point you'll turn up the production. Now, but over the longer term, I think there's such a structural shortage coming that maybe that 55 that we used in the DFS is probably a bit conservative, but I think it's the long-term price is going to be somewhere between 50 and 70, probably.
Yeah, great and good points about the capacity. Just Kazatomprom and Cameco, if they are able to obtain full nameplate across all their projects, still won't be enough. There's still deficit in the market. And of course, as you know, to get to nameplate across all of their projects, that'll be 2 years from the starting point. So very interesting time frame and the bottleneck factor that we have in front of us here. Let's talk about just kind of the remaining challenges, Julian. Besides the finance and construction, what lessons have been learned with advancing a company and project at this point? And what do you see really outside of finance and construction as any remaining challenges?
Look, I think that's a really difficult one to answer. The remaining challenges, I'll be absolutely clear, the remaining challenges is managing our cash until we can write the contracts. If I've learned one thing from being with Vimy for the last 7 years, hindsight is a wonderful thing. We didn't have any choice but to push through and get the environmental approvals in a hurry, because I want to be clear, when I say in a hurry, I don't mean they were rushed. I just meant we knew we had 3 years to get them in, and it was essential that we got them in the 3 years, and we did. In the absence of, if you like, the political problem that we perceived as likely to happen when there was a change of government, which there was, and they actually in Western Australia they introduced a ban on any new projects. They just allowed the existing projects that got their approvals to go through. So we got through on that. If it hadn't have been for that, we would have probably gone slower, because the market signals weren't there. I mean, we all thought that the uranium price recovery was coming. I mean, I don't think I've ever been. I've been an economist. I've been forecasting for companies for a really long time. I think the most wrong I've been on any forecast has been the speed with which Japanese reactors will come back to the market. I put on my economist hat and I said, when you've got $200 billion worth of assets sitting there, stopped for no obvious reason, surely they're going to find a way to bring them back in. Surely with that amount of capacity out of the market, the Japanese will struggle and will have to bring them back in. But they managed, and they switched very few of them back on. And I just got that completely wrong. I've been disappointed with the speed with which the Chinese have built out their program. They made very strong suggestions about how many they were going to build in what sort of time frame, and then haven't met them, and for lots of reasons. And unfortunately, you can't get behind the politics of what's going on there. I think it's not to do with them not being committed to nuclear, and it's got nothing to do with them not being able to build them or anything else. It's just that they put in place a program that was basically based around Westinghouse's AP1000. There's been some technical problems with that. There's a host of argument about whether they should use imported technology or Chinese homegrown technology. And then with the delays because of Fukushima and a whole load of other things, including the pump failures on the CAN motor for the AP1000 that set them back a couple of years, the indigenous technologies kind of caught up and they've grafted a bit of that onto their own design. And I think it's caused a delay. So I thought they would be building the inland program by now. I can remember in 2017, 2018, the Chinese guy saying to me, "Oh no, we don't think the inland program is going to start till 2020." And I can remember thinking, why would it take them that long? But here we are near the end of 2020. They haven't started their inland program. Now, I think they have the capacity to catch up when they finally implement that program. So you've got a disappointing Japanese, disappointing Chinese. So that element of demand, which was quite significant, hasn't kicked in yet. And so we'd had this chat 6 years ago in 2014, and I'd be saying to you, oh look, the price is going to go up, and it's going to go up soon, but I can't tell you when. But I can tell you, I'm sure it will have gone up by 2017. I'd be saying, and people will be saying, "Oh, really? You think it's going to take till 2017?" Well, here we are in 2020, and still hasn't got back to the level. So when I first joined Vimy, or EMA as it was then known, the spot price and the long-term price were both on their way down, but they were in the 40s and the long-term contract price was in the 50s, and we all thought it was going to turn round soon. I just feel a bit like a scratch record sitting here all this time later going, yeah, it's going to go up soon, but it will. We're hanging in there. And, when I say with the benefit of hindsight, I wish we could have done things slower and conserved our money. But by the same token, we didn't have any choice. We had to get the approvals as quickly as we did. We'd taken the decision to keep going and hope the market would recover. And I think we're nearly there. And, it's a bit of a knuckle ride, but we're hoping that the price will recover next year enough for us to be able to see the light at the end of the tunnel and sign those contracts. And I've got to say, I think that once those contracts are signed, once the first one gets signed, if it's a quality utility in the US that signs on the dotted line with us, I think then the floodgates will open. That fear of missing out will overwhelm those who, at the moment, don't want to write contracts with a uranium developer just in case they don't get in production. I think signing on the dotted line by a blue chip utility in the US will wake everybody up and go, oh, well, if they're writing a contract with them, these guys must be able to get into production. And it's fear of missing out. They'll all want to write a contract with us, and we'll be away to the races. That's my hope. But the price has got to get up to a level where we can write that first contract.
Let's see what happens. And I think Russia's probably been the only one that have really kept most of their promises. But I think we're at the acceleration stage where I think China is certainly wrapping up those construction efforts, completion efforts. Japan is putting forth efforts recently to continue their restarts. And, Russia's doing a pretty dang good job of keeping their programs going.
And look, I'm going to say it may be contentious, but I actually think that the French are going to eventually come back to nuclear and get rid of this kind of ridiculous notion that they're going to phase down their nuclear fleet till it's only supplying 50% of their electricity. I mean, Macron has been really, really careful. If you listen to actually what he says, he's like, oh, yeah, we're committed to going to 50%, providing it won't increase our carbon emissions. And it's like, oh, but it will. Yeah, everywhere in the world, I'm pretty sure everywhere in the world where a nuclear power plant has been switched off, it has resulted in an increase in emissions. And so I just don't see how anybody thinks the French can close down 9 or 10 nuclear reactors and not push up their emissions. And basically Macron said, yeah, we'll go to 50%, providing it doesn't increase emissions. He knows, I know, and most analysts should realize that is a clear signal he's got no intention of switching them off.
Yeah, it is a bit silly. And it would be nice to see France come back out and compete in the global stage for nuclear turnkey like Russia is right now. Russia's leading that by a long shot. The U.S. is trying to make some efforts, but pretty silly efforts at this point. And look, stop trying to change the technology. Stop tweaking the engine. Stick with what works. And we have proven technology that already works. There's good PWR designs out there that work fantastic. Stop screwing with the designs and just stick with something that works. And so it'd be nice to see the French come back into the global market as well. And, the other part to what you said earlier, this sector will teach you patience. The natural resource sector will teach you patience, extreme patience. And if you haven't figured out patience yet, you probably shouldn't be in the sector. But I can tell you that the natural resource sector will come with a lot of hard lessons. We've got a great situation here where we have acceleration coming on the nuclear side. And we're right at the end of a broken supply chain, and how that gets recapitalized, Julian, going forward. That question will get answered, and it'll probably be answered in the next couple of years. I believe it was Mike, just on the financing front here, before we move on to just a few final things to wrap up. I believe it was Mike that mentioned there was some meetings and discussions with Bacchus Capital out of the UK. What happened there, and is something still in the works regarding financing participation?
We talk to everybody all of the time. I'm not aware of any current discussions going on with Bacchus. So, yeah, look, I don't think they're a dark horse waiting to pounce and provide finance for us, but everything's on the table. I mean, we'll take whatever will get this project into production. The preferred route is not selling royalties attached to uranium streams or anything like that. It's at the moment it's centered on conventional finance.
On the exploration project in Alligator River region, any updates on there? And you guys do have a JV with Rio Tinto on one of the projects. Is that still correct?
Yeah, but look, Rio Tinto is most obviously on their way out of uranium. So what happened was that this ground was held by Cameco originally. Rio was interested in farming into it. They wrote a farm-in agreement. They paid for a whole lot of exploration and then changed their mind. And I don't think they changed their mind because of the quality of the asset. They changed their mind because they've decided to get out of uranium. So they already have the Ranger mine, which they effectively own through ERA, and that is going to cease production in about 3 weeks' time. And then they're going to have to spend 5 years rehabilitating it at huge cost. They've sold out of their assets in Namibia. So basically, Rio is going to be just completely out of the business. And it obviously doesn't make sense for them to have in their portfolio a kind of exploration development project in Australia. So they haven't contributed to that joint venture that was with Cameco and is now with us for the last couple of years. And so if you track them, their percentage in that JV has gone down from 25 to 22 or thereabouts. Sorry, I'm not 100% sure on the figures because we've spent money on exploration and they've chosen not to match that, so they've been diluted down. I'm hopeful at the end of the day that we'll be able to not get them out, but buy out their share at some point because they're just not interested in it. But as I got to stress, I don't think it's because they don't think it's very good. It's just that they're not interested in uranium. And sorry, I hope I'm not going over time or anything, but people, they hear Northern Territory, all Rio, all, difficulty with indigenous people and all the rest of it. Rio's operations are in a very slightly different part of the country, different people. So the area where we are, before we got that, Cameco was there. They set up a good relationship with the local people. We've come in, we've taken it over. It's working fine. They're happy. They would like to see the mine developed. No problems whatsoever on there with the local Aboriginal people. None whatsoever. They are supportive, and of course they want the royalty and they want the jobs and they want the development. Look, drilling is, it's a great site. We liken it to the Athabasca Basin, and that's not tongue-in-cheek or anything like that. It's the same unconformity underneath it. The only difference between the Athabasca Basin and where we are in Alligator River is it's a bit shallower and there's no lakes. So if you find something, you don't have to dig down as deep and you don't have to do any freezing, and that's a massive reduction in the cost. So I think when we did a very preliminary scoping study on Angularli, it was just a decline down to it, and it was less than 100 million to get it into production from memory. But obviously, we're still looking there. We're doing cheap stuff at the moment. When Vimy gets into production and we have a revenue, we'll be able to fund proper exploration up there because we think it's so prospective up there. There's highly likely to be better deposits than the small one that we found. We've got a process going with KPMG at the moment to see if anybody else wants to come in. Eventually we'll get Rio out and get another partner in who wants to farm in and fund the development, and we'll find another Jabiluka. But that's all for the future. We at the moment, my focus at least is on Mulga Rock.
It's an interesting trend seeing the majors go away, but I wonder what the majors will do when the price is much higher and how that starts to look attractive. Again, I suspect that there'll be some re-examining of their views when the uranium price is much higher. We've seen that type of stupidity happen in other resource sectors as well, where all of a sudden there's a frantic rampage and things get overpaid for, et cetera. It'll be interesting to see what they do with Jabiluka because that's a fantastic asset. The region is a fantastic prospective region in Australia, arguably probably the best. So Jabiluka, it'd be interesting to see if they hold that to liquidate later or how they handle that one. It's a nice deposit. Well, Julian, just one other question here before we wrap up. I'm trying to get them through here. It doesn't look like we'll be able to get all the questions answered, but on the currency side, if you guys get into production and contracts are signed, will you guys plan to stick with the US dollar denominated contracts or will there be other currencies? I mean, obviously, most of the stuff we've seen has always been in the US dollar. Any thoughts on different currencies?
Yeah, look, highly likely, stroke inevitable that the contracts will be written in US dollars. I mean, obviously, it depends on the client, and let's be clear, we wouldn't be averse to writing euro contracts with European customers if that's what they wanted. But I mean, it's interesting you mentioned the currency. I mean, our DFS was done, I don't know, around 70, 68 cents. We just went up above 75. I think that's a temporary phenomenon, a lot driven by just the iron ore revenue that's just flooding into the country. I think the price of iron ore, I'm not sure what it is today, but it's around $160 a ton, and that's like. So to give you some perspective, where as an economist, where do I think the iron ore price will end up eventually? Somewhere around $60, $65 a ton would seem a reasonable long-term forecast. So the iron ore price is a long way up, and Australia's sending, and it's such a big number, people can't get their head around this. It's sending 800 million tons of iron ore out through the ports of northwest Australia. So, it's not surprising the Aussie dollar is staying up. We've got a robust mining sector. It's exporting. And notwithstanding, and I don't know how much you follow it, the way the Chinese are kind of sanctioning Australia by banning or putting tariffs on imports to China from Australia, the barley, wine, a whole lot of products. They haven't touched iron ore. They need it. And, for all the reduction in exports from Australia as a result of that trade discrimination against Australia by the Chinese, our exports are actually going up to China because of the price of iron ore. So it's not surprising that our dollar's going to stay high. The iron ore is going to stay high for probably another couple of years. And when it goes back down again, that's when the dollar will go back down again. So I'm not unhappy with the 68 cents or 70 cents that we use for our DFS, because by the time we get into production, that's where I think the exchange rate will be. We're still expecting a big chunk of our exports will be going to the US utilities. Having written a whole lot of contracts in US dollars, as I said, if the French suddenly decide that they want to write a big strategic contract with us, but the condition is it's in euros, we're writing one in euros with them. But right now, we don't have plans for anything other than US dollar denominated.
Yeah, I think that makes sense. And the Canadian dollar, Australian dollar, I think that there'll be some interesting times ahead for those two currencies as this resource bull market continues forward here. Well, what do you say to potential new and even existing investors about Vimy at this stage and at current price levels?
Well, and look, in all seriousness, at least when you compare us to our peers on almost any metric, we're undervalued. We're at the stage in the cycle where we're still all suffering. All of us are suffering from the long price doldrums. We've seen a bit of recovery recently. And look, when the uranium price goes up, they're all going to go up. The reason why to invest in uranium equities now is because we're close to going up, and you want to get in before it goes. The reason why it's Vimy is because when it goes, we will get into production. And so we're a long-term investment. You don't have to worry about getting out before we go back down again. You look at companies like Paladin in the early days and see how their price just kept going up. That's the thesis that we want to present, that we will be getting into production. And when we do, we'll suddenly be, locking in contracts at prices that justify us staying in production, regardless of what happens to the prices. And our share price will end up reflecting that. So we're a good long-term investment.
And Julian, the best way for the audience to reach out to you and the company.
Right. So we've got a website. If you want to ask any questions, if there's anything you want to know, drop us an email. The best thing is to send it to info@vinyresources.com.au. If anybody wants regular news from us, go to our website, sign up to our mailing list. You can just put yourself on the list and you'll get all our mail outs. So just send them to info@vinyresources.com.au. They'll be looked at straight away. Sometimes it takes a couple of days to respond. Sometimes you get a response in a couple of hours. I mean, we're very good in that sense.
Well, Julian, it's been great. I appreciate you taking the time to come on and introduce Vimy Resources to our audience for the first time. Good luck out there and keep up the efforts.
Well, thank you. It's been very enjoyable. I look forward to getting questions from people who want some answers.